Ghana's fuel prices surge. Petrol now GH cent 13.38, diesel at GH cent 14.20. In a fresh blow to already strained household budgets, fuel prices in Ghana have climbed again, with petrol now selling at GH cent 13.38 per liter, up from GH cent 12.99, and diesel reaching GH cent 14.20 per liter, from GH cent 13.90. The first major market move came from GOIL, which led the upward adjustment amid a week of price stasis among its competitors. With over 200 oil marketing companies, OMC's nationwide industry watchers are now observing whether this act will ripple through the sector. What's fueling the hike? One cedi depreciation versus dollar demand. Primary culprit behind the price rise is the weakening of the Ghanaian cedi relative to the US dollar. During the latest pricing window, the cedi depreciated from about GH cent 11.20 to GH cent 12.07 per dollar, a drop of nearly 7.76%. Over the year so far, the currency has lost around 14.02% of its value, making it one of the worst performing globally. This devaluation increases the cost of importing petroleum products, which in turn squeezes margins for OMC's. Point 2. Global oil price trends. Interestingly, international prices for crude oil and refined products have been easing. Petrol fell by about 2.52%, diesel by 4.12%, and LPG by 2.69% in recent periods. However, these drops have been more than offset by the cedi's decline, compelling domestic price increases. Point 3. Earlier industry projections and policy levers. Before the adjustment, the Chamber of Oil Marketing Companies (COMAC) had projected the following. Petrol could rise between 3.66% and 5.86%, hitting about GH cent 14.17 per liter. Diesel could increase 2.12% to 4.32%, potentially reaching GH cent 14.67 per liter. LPG was forecast to rise between 2.23% and 4.23%, hovering around GH cent 14 per kilogram. Also relevant is Ghana's new energy sector levies, Amendment Act 2025 Act 1141, commonly referred to as the D levy, which adds GH cent 1 per liter on petroleum products. The extra levy, combined with existing margins and tax burdens, further inflates retail prices. Impacts and challenges ahead. On consumers and transportation. Higher fuel prices inevitably cascade into increased transport costs, which then ripple into food prices and general inflation. Many households, already navigating tight budgets, may feel more pressure, especially in rural and peri-urban communities where public transport is essential. Transport unions and commuter groups may also push for fare hikes in response. On market competition and consumer choice. With GOIL now at the forefront of this adjustment, its pricing move could pressure other OMCs to follow or risk losing market share. GOIL's decision may test consumer loyalty, particularly in areas where competing stations are accessible. On policy and fiscal pressure. The government's reliance on fuel levies and sector taxes to raise revenue or service energy debts means future pricing windows may remain volatile. Meanwhile, public pressure may mount for greater transparency, accountability, and perhaps targeted subsidies or reliefs for vulnerable groups. Outlook and what to watch. Whether other OMCs will match GOIL's increase, triggering a new industry baseline. How the cedi performs in upcoming weeks. Any stabilization could moderate future price surges. The impact of global crude oil dynamics, especially in major producing nations, on import costs. Government responses, including tax reliefs, subsidies, or regulatory interventions if public backlash intensifies. The broader effect on inflation, cost of living, and economic sentiment across Ghana. Fuel price adjustments are never simply about energy. They touch on currency stability, fiscal policy, market competition, and everyday livelihoods. As Ghanaians brace for higher pump prices, the burden will be felt across the entire economy. Oil drum fuel prices rise again. Petrol hits GH cent 13.38, diesel GH cent 14.20. Ghanaians are facing another increase in fuel prices, with petrol now selling at GH cent 13.38 per liter and diesel at GH cent 14.20, following adjustments led by state-owned GOIL. Why the increase? Cedi depreciation. The cedi fell from GH cent 11.20 to GH cent 12.07 against the US dollar, pushing up import costs. New fuel taxes. A recent energy sector levy, Act 1141, adds cent 1 per liter to fuel products. Global price trends. While international prices for petrol and diesel dropped slightly, local exchange losses outweighed those gains. Megaphone public reactions. Man-standing commuters and consumers. Every time prices go up, it's transport first, then food. We are tired. Commuter in Accra. My salary hasn't changed, but fuel and groceries are up every month. Civil servant in Kumasi. Automobile transport operators. Will review fares if this trend continues. Our costs have doubled in just a year. Local GPRTU rep factory small business owners. We use diesel generators due to power cuts. This hike means higher costs and lower profits. Cold store operator Takarati. Oil drum oil marketing companies, OMCs. OMCs say the weak SAIDI and higher taxes leave them little room to absorb costs. Others may follow GOIL's lead in raising pump prices, chart increasing what to expect. More price hikes possible if the SAIDI continues to slide. Potential fare increases from transport unions. Broader inflationary pressures on food, goods, and services. Calls for government relief, fuel subsidies, or tax reviews may grow louder. 3. Press release formal. For immediate release. Fuel prices adjusted. Accra, Ghana. Fuel prices have risen across the country with the new rates set as follows. Petrol cent 13.38 per liter. Diesel cent 14.20 per liter. The adjustment reflects current market conditions. Consumers are advised to take note of these changes as they plan their transport and logistics needs.
Still on Ghana's fuel price rate. Fuel price hike. OMCs show restraint. COPEC says 3% hike, not as harsh as expected. In a move that's raising eyebrows and sighs of relief alike, the Chamber of Petroleum Consumers, COPEC, in Ghana has described recent increases in fuel prices as relatively modest, a magnanimous gesture by oil marketing companies, OMCs, given the pressures of currency depreciation and global pricing. Background: what was expected versus what happened. Ghana's currency, the SAIDI, has been under strain, depreciating by nearly 8% in recent weeks. Under such conditions, COPEC anticipated steeper hikes. Petrol could have seen a 4% increase, while diesel and LPG might have gone as high as 7%. Instead, what consumers are witnessing are average increases of about 3% at the pump, a considerably softer adjustment than feared. Some OMCs have already raised their pricing, e.g. GOIL by 3%, while others have yet to make changes. COPEC's executive secretary, Duncan Amoah, praised these actions. He noted that OMCs delayed their adjustments, giving the public a short grace period during which the old prices held. According to Amoah, they've given us a week at the old pricing levels. Most of the oil marketing companies have kept their prices at the old levels. They have not gone up. What COPEC is saying. COPEC credits the OMCs with showing restraint, rather than immediately passing the full burden onto consumers amid tough economic conditions. The Chamber says the 3% average hike is a lot welcoming, considering what could have been much steeper increases. Only a few OMCs have made adjustments so far, signaling that more increases may still come. Consumers who have not yet purchased fuel are urged to do so soon, because more OMCs are expected to raise their prices. Amoah warned, if anybody hasn't bought yet, we will be encouraging. Try to get some fuel now before you get home, because it will not last for the next week. What this means for consumers and the market. Short-term relief for motorists. Though no one is thrilled about higher prices, the smaller-than-expected hike gives some breathing room for households and businesses already struggling with inflation and rising costs in other sectors. Pressure on transport fares looms. Even this moderate increase may force discussions about adjustments in transport fares. Stakeholders and regulators will be watching closely. More increases likely on the horizon. With many OMCs yet to adjust, further increases could follow. The restraint so far may be temporary, especially if the SAIDI continues to slide or global fuel prices surge. Calls for margin absorption. COPEC's comment suggests that consumers expect OMCs to absorb part of the cost rather than passing the full burden downstream. The oil sector's reaction to this expectation will be telling, a test of public trust. By characterizing the hike as magnanimous, COPEC frames this as a cooperative concession. Whether OMCs maintain that posture in future pricing windows will affect public sentiment. Conclusion: in a volatile economic climate marked by a weakening SAIDI and unpredictable global oil markets, fuel price adjustments are a sensitive issue. COPEC's stance is that OMCs have, at least for now, tempered what could have been a much harsher blow. But the situation is still fluid. Consumers, transport operators, and regulators will all need to stay alert to what comes next. Thanks for listening. Here is Spartan Jom Studios. Make sure to like this video and subscribe for more updates on the price of fuel in Ghana